Rob, thank you so much for joining us today.
My pleasure, and nice to speak with you again, Elijah.
All right. Well, today we were going to do a viewer's question edition, and some viewers submitted questions, and the first question is from David Gray, and he's wondering, is it better to own physical gold or silver? I know silver is an industrial metal as well as a monetary metal, but I hear people talk more about owning gold as a way to protect oneself from the coming financial meltdown. So, Rob, what is your perspective on this? Gold versus silver, which is better?
Well, I like them both, but I like to pay attention to the fact that for every ounce of gold that's mined out of the Earth's crust, 9 ounces of silver are mined. And given that, or if you accept the notion that both of these metals are indeed money and are terrific historical stores of value, and if you consider for a minute the fact that silver has actually been money longer than gold on the timeline, I think that the amounts that get mined out of the Earth's crust would augur for a rational gold to silver price ratio of something in the magnitude of 10 to 1. And there have been long stretches of time when an ounce of silver has traded less than 10 to 1. And then for other long stretches, it was around 15 ounces of silver would buy an ounce of gold. But today we're seeing prices where silver's up plus 70 times or 1/70th or less than the price of gold. So all that being taken, while I like both metals, I would skew my holdings to be weighted to have a little more silver, because I do believe when price suppression is finally broken, I think that the gold-silver ratio will narrow dramatically from plus 70 into something maybe in the neighborhood of 10 to 20. So I like them both, but I would skew my holdings to silver.
Moving now to this next question, still on the topic of precious metals, this viewer is wanting to know, where is the silver and gold coming from to bridge the gap between demand and what is being mined?
Well, I mean, the gap is being filled with paper. And when I say paper, I include GLD and SLV in the paper programs, because we don't really know the true origin of the metal that's purported to be held by GLD or SLV. I have a very strong suspicion that much of the metal in GLD and SLV is very likely leased, and if it's been leased once, maybe it's been leased 2 or 3 or 4 times. So at the end of the day, I don't think we really know or really have good evidence to suggest that GLD and SLV have clear title on the metal that they purport to have. But all that being said, there is a constant grind of physical flowing from west to east. India, primarily India, China, Russia are buyers of metal. Lately, it's been reported that the Chinese have become very voracious buyers of silver, and I think this actually explains why we've been seeing such strange reporting in the silver market regarding open interest. Open interest exploding to all-time highs on COMEX, for instance, as the price of silver has been, basically in the dumps. And these are things that don't generally happen in anything that would resemble a free market or an unsuppressed market. In any case, there has categorically been an awakening, just as people are awakening to the globalist push for one world government. There's been an awakening over the recent months and years, a growing awakening that metals prices are brutally suppressed, and people are understanding that the way that the suppression will be broken or ended is by taking delivery of physical ounces, and increasingly that's what's occurring. And if this continues to occur, the price suppression will be broken, and that's coming to a theater near you very, very soon, in my belief.
Now, speaking of people taking delivery of gold and silver, Pat Kaiser is wanting to know, is the COMEX behind on deliveries? And when do you see gold and silver hitting the circuit breakers to halt trading?
Those are very good questions. The state of COMEX deliveries is something that I can't really speak to. I mean, I know that they don't have the ounces in their inventory to be able to deliver if a significant portion of the people holding those contracts actually held out for delivery of physical ounces. But I also know anecdotally that people who have tried to take big amounts of metal off of COMEX in the past, there have been let's just call it anecdotal rumors, or there's been a lot of chatter that people are being given a very difficult time when they want delivery, or like margin increases for one. So they'll double, and there have actually been instances in the history of COMEX. There have actually been instances where they've actually raised the margin to a bigger number than it would cost to actually pay for the metal in full. You see, what people need to probably get a grasp of, if you want to really understand COMEX. COMEX is a private club, and they don't want people disrupting the boat. We know, like, what the COMEX did to the Hunts back in 1980, when the Hunts were trying to corner the silver market and had run the price up to $50 an ounce back in 1980. The COMEX changed the rules and basically instituted a new rule where the Hunts could only liquidate. They could no longer buy, and they couldn't take delivery. So I guess I'm answering in a very convoluted way, because I don't really believe that COMEX has metal for sale. I don't really believe that COMEX is not the precious metal store. COMEX is a rigged edifice which purports to be a venue for price discovery of precious metals, but to the contrary, what it's become in practice is a venue that dictates artificial pricing on a very, very scarce commodity. And with the ballooning of open interest in these contracts, that fact, I think, is starting to become very, very aware. And to answer the second part of that question, or the second question, when does it collapse? That's a timing question, and timing on this has been very, very difficult for most people. And I think the best way to answer that, we see the open interest continuing to build. We're starting to see gaps in the pricing, which, in my view, is showing that the people doing the manipulation of the price, or the suppression of the price, are starting to run short of resources to continue it. And at some point it breaks, and it will. At some point it will break. But saying the day or the week, it's a bit of a mug's game. Except I believe and I feel that my perceptions tell me we're very close, extremely close.
All right. Well, moving now to this next viewer's question, John Burkett asks, in Venezuela, people have resorted to bartering, with food as the premier currency. Do you think that this phenomenon could go global after the collapse of the major currencies? If so, do you think gold and or silver will play a role in bartering?
To answer that simply, I would say yes. I think it's important and incumbent upon people to have put away some storable food in the event of disruptions in our just-in-time supply chains for food and for any other essential commodity. And I believe that gold and silver will resume their rightful roles as the backbone of any new mode of commerce and or barter system. Absolutely.
Now, this viewer is wondering about a similar topic. Do you see that after the collapse or in the near future, do you see digital currency or a gold standard taking hold?
Digital currency is something I am not sold on, because digital currency is something that can be, you see, I believe in a thing called the internet kill switch. And if you actually Google the term internet kill switch, you'll read that it's been assumed or proposed and assumed that the U.S. government has an internet kill switch and can turn the internet off. After all, it was the U.S. Defense Establishment that created the internet, not Al Gore. And if the internet's turned off, your digital currency goes poof, which is why I am such a staunch advocate of owning and holding physical precious metal outside of the banking system, because I think this will be salvation for many people at some point in the future. And do I think we go back to an actual gold standard? I think the answer to that question is yes, but it might not be the gold standard that we saw last time we had a gold standard. Like, it might not be the same situation as pre-1971, where the dollar was the world's reserve currency, but it was redeemable for ounces of gold at $35 an ounce. I don't think we go back to anything necessarily that rigid, but I could see us going back to a bimetal standard where gold and silver were both deemed to be money, and that's basically where my head is on that. But I think gold and silver will play a part in the backing of money, and there may also be commodities added into that mix. There could be some crude oil, or there could be a food staple maybe added to that as well. It may be a basket. But I do believe that going forward, money will be backed by tangible things. Yes.
Now, still on the topic of gold and silver, this viewer is wanting to know, would it be possible that the U.S. government would impose a heavy tax on precious metals in the event of a financial collapse?
I think the odds of them doing that are very high. I think that I could see governments in the Western world placing extremely high capital gains taxes on people who make massive windfall profits on mining companies going forward. If there's a collapse in the currency, and if the price of metals absolutely soars, the value of mining stocks will go up many fold. These kind of gains will all provide the government with a clear paper trail and a clear ledger in terms of how much has been made on them. And I could absolutely and expect there to be huge taxes imposed on people who have made windfall profits where there's a paper trail. And this is why, by the way, I'm not a staunch advocate of owning mining stocks. It's not because I don't think mining stocks won't go up. On the contrary, I believe they're going to go up a great deal. I just wonder who the gain is going to accrue to. I don't believe that the investor is actually going to end up making the money that he thinks he's going to make. I think the government is going to make the money. And that's why I'll take my chances in the ditch with my physical precious metal. I know what I've got. I know where I've put it, and I'll manage it accordingly. So that's my advice, and that's the way I live my life. And I don't know what else to say about that.
All right, well, moving forward here, Bruce is wanting to know, just over 23 countries have stopped trading in the US dollar. The Brexit is actually good for the US dollar as a lot of flight capital moves to the US for safety. What is it going to take for the US dollar to finally be rejected and go away?
Well, if you've ever heard of the cliche, the straw that broke the camel's back, I think the viewer has just stated that 23 countries have abandoned the dollar, or more or less abandoned the dollar in trade. So is the straw that's going to break the camel's back going to be the 24th country, the 25th country, the 26th country, or the 34th country? But you see, what you can discern or take away from the comment that the viewer has already made is that there's a movement afoot, and the movement that's afoot is basically many countries in the world are abandoning the dollar, and this movement, at least in my view, this is a movement that isn't going to stop. It's only going to intensify or accelerate, and at some point we will reach a breaking point. And when or which number of country finally is the straw that breaks the camel's back, it's another timing thing. And but I'm confident that it will occur, because the trend is your friend, and the trend is to exit the dollar. And flight capital, and if you really want to talk about flight capital, even though we may not be able to see it, Elijah, as much as it's really occurring, if you think that money's pouring into the dollar, think also in terms of how much money is pouring into physical metal, and this should only hasten the demise of metals price suppression, because this is a lethal attack on the remaining stores of spendable physical metal the West has to keep their price suppression thing going. And if you're talking real flight capital, the real smart money is moving into physical precious metal. But nobody's ever going to tell us. That's the thing about precious metal. It's very interesting, actually. Just along this line, Chris Powell, Secretary Treasurer of GATA, is famous for saying countries in the West are more guarded about their true positions in physical metal than they are about nuclear secrets. So anyway, suffice to say, if there truly is a flight to safety on, physical precious metal is being acquired, and that's why we're seeing the prices going up, and especially with China being rumored to be heavy buyers of physical silver now. You notice the way the silver price has been moving up, and actually, it's a movement, and I don't think we're turning back this time. So anyway, that's where I think we're headed, upward and to the right.
Mike is wanting to know, what will happen to personal debt in Canada when the reset happens? Now, I guess, do you want to answer this question with respect to what will happen in Canada? And I guess also for other viewers, what do you think will happen in the United States and maybe in other major parts of the world?
Well, the way I would answer this question is to remind people of history. And in Germany, when they had their Weimar experience where the German currency collapsed to zero, the thinking by a lot of people goes more or less like this: if the currency turns to Zool, I'll be fine with my real estate because I'll be able to pay my mortgage off in devalued dollars, and therefore I will have a huge windfall. Well, in Germany, that's not the way it worked. In Germany, what they did, as the currency collapsed, they started pegging mortgages to the price of gold. So you might not be as well off as you think you're going to be if you've got big mortgage debt and you think that a collapse in the currency is going to be your exit, because we live in a world where bankers make rules. Bankers own the politicians who make the rules for the bankers. And my gut tells me if we see an outright currency collapse, you probably will see mortgages tied back into something tangible or real that's also resetting. So I'm not an advocate of having big debt. Period. I don't believe in it, and I think the more unattached you can be from the banking system, the better off you're going to be in the long run.
This viewer is wanting to know, with all the volatility in the market, why haven't we seen any of these big banks implode? We always hear they are on the verge, but yet nothing has happened. What keeps them afloat?
Well, in America, since 1934, there's a law on the books that allows designates of the President of the United States to grant waivers to companies, which means that if they're granted the waiver, they don't have to report their true financial condition. So what that means in the real world is if you have an institution that is insolvent, which I would argue Morgan Stanley was insolvent in 2008, and Morgan Stanley was excused from accounting, and they were, because they were a horrible credit. You got to understand, because it goes back to credit, and Morgan Stanley was such a bad credit they couldn't borrow money like in the interbank market. The only way they could get any funding at all was to go to the discount window and get money from the Fed. And they tried to marry Morgan Stanley off to another financial institution, but they couldn't find another financial institution in the world to take out Morgan Stanley because they were that poor a credit. So what ended up happening with Morgan Stanley in 2008, they had a period of 3 months where they on their derivatives book they added $8 trillion worth of credit derivatives, interest rate swaps, and FRAs, $8 trillion in 3 months. And that was de facto a stealth recapitalization of Morgan Stanley by the U.S. Treasury, specifically the Exchange Stabilization Fund. And they recapitalized Morgan Stanley by stealth because, you see, the whole universe of banks in the world doesn't have $8 trillion worth of credit lines for an institution like Morgan Stanley when they were that bad a credit. And that's how we know. And that's recorded for posterity in the quarterly derivatives reports, which are lodged on the Office of the Comptroller of the Currency site. So you can go back and you can see it. And the notion that Morgan Stanley did $8 trillion worth of these instruments in a 3-month period with the real world, if you believe that, then you believe that an elephant and a giraffe can fit through a garden hose. That's a dog that doesn't hunt. So, the evidence is there. Certain institutions are excused from accounting. This speaks directly to the question. Why is it some of these too big to fails haven't failed? Well, because the rules are applied selectively. Institutions that seem like easy prey or seem like are easy targets, they're held to the rules. And the too big to fails, well, they look the other way. And the laws are right there on the books. You can go read them. So this is what goes on, and it's crony capitalism, where the rules are selectively applied. That's how and why we haven't seen more of these institutions fail.
This one is from Alex Barker, and he's wanting to know, if my bank fails, all of my stocks in my tax-free savings account go down with it. Should I sell my entire portfolio and buy physical now? And I know on this channel, we can't give any financial advice, but what is your perspective on this question?
My understanding is that your stocks are held in I'm not. You know what? The real answer is I don't know. I don't know the answer to this question, and because my question would be whether your stocks, they don't have certificates anymore, but I think your stocks are in street form, and I don't know whether they're segregated or not. I mean, John Corzine at MF Global showed how he rehypothecated everything in MF Global accounts as it related to, but I don't know if that extended to stocks or not, or whether it extended just to commodities. And I'm sorry, I'm unclear on that at the moment. I think you'd actually need to talk to either an accountant or a lawyer about what the outcome would be in your jurisdiction if that were to occur. Because truthfully, I can't, and I don't even know if it would be a uniform answer across all jurisdictions and across all institutions.
All right, now I think this will be our last question for today. So this one is from Alpha Lenny. There seems to be continuous stimulation and pumping up of the markets on a daily basis. Where is the money or numbers on a computer screen coming from, and how is it distributed into the market?
Well, money's created out of thin air. I guess it really begins with the Treasury. The Treasury instructs the Fed to create a line item in the Treasury's account at the Fed. The money's conjured out of thin air, and then the money is distributed or allocated into a program or programs that are dictates of I would say a combination of both the Fed and the Treasury. And the discount window is one place where money's pumped into the system. The money's created out of thin air. The Treasury instructs the Fed to go into the market and buy securities or to purchase futures, whether they be stock futures or index futures, and then ultimately the market makers, who are the banks, they make the market in these instruments, and the money's transferred electronically to these institutions, and that's how liquidity's added. I mean, it's not really a Houdini act. It's actually very in your face, Ponzi-esque is what it is. Money's created out of thin air, and the money that's created out of thin air is then used to buy real things. And most of it, of course, when I say real things, most of it is used to purchase financial assets. But isn't it interesting? Isn't it interesting how on the Friday of the Brexit vote in Britain, the Bank of England responded to the mayhem in the markets by making 400 billion euros available to the banking community, and that money was to settle or hit bank accounts the following Wednesday. And isn't it interesting how we had a nice stiff rally in the metals on that Wednesday, the day the money hit the accounts? The liquidity wave comes to market and the metals go up. Well, you know what? We're going to be seeing more liquidity added because the global economy is not doing well, and there's a lot of indicators that say that we could be staring at another global recession / depression. There's more liquidity on the way, and the price of metals is going to go higher. Full stop, and that's a guarantee.
Well, Rob, Kirby, thank you so much for your time today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Yeah, well, I truly believe we're at a point where it's buckle up time, and you got to have your essentials, your means to preserve your health maybe in the form of storable food. Means to preserve your financial well-being, which in my view is spearheaded by owning physical precious metal, and you probably want to have your spiritual house in order too, and you might want to have a means to protect it all. And that's what I would recommend anybody use as their guidelines going forward. And that's about it. You can find me on the web at kirbyanalytics.com.
Once again, Rob, thank you so much for your time.
My pleasure.